Well, it's just been 9 months of the journey from being an MFI to becoming a small finance bank, and in fact within this short span of time Equitas has grown to over 300 liability branches in such a short span of time, and they've launched a slew of products right from mobile banking to purse to having a locker facility for all their customers, and also having a special product called as Fast Tag. And we have today here MD and CEO Mr. Vasudevan to speak about their growth strategy for Equitas over the next 3 to 5 years. Hello and welcome, sir. So how has the journey been so far in terms of building your liability franchisee? And I know your deposit book is already nearly around 1800 crore, CASA deposit of nearly around 17.5% is the ratio. Where do you see the liability franchisee growing now?
Thank you. Yes, it's been a very eventful journey. The last 9 months, we got converted in September of last year, and in a very short record span of about 7-8 months, we have been able to launch more than 300 liability branches, full-fledged branches. You can see one of them right here. Getting the physical infrastructure was a major challenge, and our team has been able to deliver very well on that. Today, all our basic services which is available to any customer of any bank is available from Equitas Bank also. So we see ourselves as positioned as a very strong bank from the liability franchise, addressing the mass and the mass affluent segment of the population, and we are in a position to give them all kind of services that any other bank in India is able to give them. We hope that we'll be right up there amongst the best banks in terms of the best banks in India. Today have anywhere between 40-45% of CASA ratio.
Right.
So our effort will be always to strive towards that kind of percentage of CASA.
Right. How do you see the entire opportunity within the entire small finance banking space?
Yeah, see, SFBs are very uniquely placed in India amongst the banking sector. You see, on the liability side, we go and address the mass and the mass affluent, which is where the deposit, the money really is available. So you pick that money at very low rates, at as low a rate as any other bank can take.
Right.
And then take that money, but not go and start lending in the mainstream markets, but actually go out and lend in the underserved markets of the population.
If I look at your product mix over the next 3 years, how would that look like? And would you be in fact reducing the share of MFI also?
Microfinance will continue to come down as a percentage of contribution to the overall book.
Right.
And on the other hand, our used commercial as well as our micro lab will continue to grow, and the 3 new products we have introduced, they should also be starting to add in terms of the volumes.
Right.
So in a 3-year time frame, if you look at it, might be that microfinance may be anywhere around 20% or so, and the other products should then fill up the rest of that contribution.
Okay. Is the concern in the MFI book really, is this just a medium term, a short term concern, or is this entire concern more of structural in nature?
See, this is what you have seen in the last 3-4 months post demonetization has been very unique in the industry. The industry typically operates at a much better collection efficiency, and it's been there for years together now.
Right.
But what's happened post the November period is something which is very different and very unique. And we are seeing that not just with us, but most of the industry players, we are seeing that the initial impact was very high in the month of November, December, and then January.
Right.
But post January, if you see both our data as well as industry data, you will see February, March, there has been a significant amount of improvement, and April the trend continues. Yes, see, there has been a few states which have been impacted. UP for one, of course we don't have a presence there, but yes, UP has been impacted. Maharashtra, Karnataka are impacted, MP to a lesser extent.
Right.
Tamil Nadu, of course, we have a good presence, but Tamil Nadu and other states have no impact at all.
I'm already seeing some amount of stress on the NPA front, not just for you, but for the entire industry as well. Where do you see your asset quality from here on, and what is the kind of provisions that you see that probably one would have to maintain?
See, traditionally microfinance operates at a very low NPA. Normally it's less than 1%, and the provision will be typically around 0.5 to 0.75% per annum. So that's the level of NPA provision that the current pricing supports.
Okay.
Anything above that, the pricing doesn't support it.
Okay.
And it's difficult to overprice it beyond what it is, because that also is an issue.
Right.
So your NPA has to be within that level.
Okay.
This is a temporary issue which has gone substantially over that.
If I am looking at 2020, where do you see your deposit book from 1800 crore now? Where do you see your loan book from current 7000 crore now? Where do you also see your scope of improvement in your return ratios?
This year, we think we will be able to grow at around 15 to 20%.
Okay.
Even though microfinance will drop in terms of percentage contribution, the other products should take in. But on a steady state basis, given the fact that we operate in markets which have huge potential and not enough supply from the borrowing side, so we believe that a 30% plus growth rate is possible to maintain, provided we have the ability to manage our book properly. And if our quality remains intact, then I think we can manage a 30% plus growth. And the deposit will really fall in line along with the asset growth.
Where would you get your incremental market share?
See, we are right now in southwest and central and north.
Right.
So for the next 2 to 3 years, broadly we may remain in this part of the country. East we have no presence today.
Right.
It might continue to be a underrepresented area as far as Equitas is concerned, maybe for another 2 years or so. Maybe subsequent to that we may start having presence in East.
Okay. Okay. What about if I'm in fact just a comparison in terms of the other your competitor, Ujjivan. If I look at them, definitely they are slightly better in terms of the return ratios. It is possible that is because they do have 85% of their book in the MFI space. But if I look at your return ratios, it's slightly at lower end. But what is definitely a gaining point for you is the kind of deposit franchise you're building, the kind of entire products that you are having. How do you expect to beat the competition, and any plans for universal bank license?
So we are not too concerned about competition. 35 to 40 lakh crores, that's the kind of demand which is assessed by various government agencies.
Okay.
And the supply is hardly there. Hardly there. It's not even 1000 crores or something like that.
Okay.
So there's a long way to go. And the challenge is not so much market. The challenge is not so much competition. The challenge is really your ability to manage your portfolio quality.
Okay.
I think that is the critical challenge.
I'm aware that you cannot really apply even for a universal bank license for the next at least 4.5 odd years. But any plans on that front?
See, we are gearing ourselves up right from the day one. We never mentally regarded ourselves as a small finance bank.
Okay.
So we follow all the guidelines of a SFB, but we are really positioned as a universal bank. So our investment in IT, our investment in our quality of people, our investment in the various reporting structures that we need to put in place for reporting to RBI. So on all parameters and all fronts, we have really tried to build the bank as if we are a universal bank. So the earliest opportunity, whenever from a regulatory perspective it is available to us, we'll be definitely keen to apply for a universal bank license.
Okay. My last question to you: how do you seek to differentiate yourself from a customer experience perspective? Your entire acquisition of the customer, the fund banking concept that you have in fact introduced. I can see a lot of color on your branches. Tell us about that.
Someone suddenly came with this idea of fund banking. Why not make banking fun? Then we were worried. Banking is serious. I'm going to deal with your money, and if I tell you that I'm going to have fun with your money, will you feel comfortable giving your money to me as a deposit? So then we said, no, it's not like that. The concept is one of the IPL. Now, if you take an IPL, the people who are playing there, they play for their life. They are as serious as any player can be. But the entire atmosphere is one of fun. We have tried to do a lot of things to make our experience from a customer perspective fun. If you just take my mobile app, for example, when I want to log into my mobile app and I need to put my 4-digit number, if I do this, then I get bubbles. Now I have to punch my 4-digit number correctly without making a mistake. This just creates an additional element of fun. But if I don't want to do this, if I am a little bit in a hurry, then I can just switch to my normal banking also. So I'll get my normal keypad.
That's interesting.
So this is just one example. Like this, in our bank statement, in our statement of accounts we send to the customer, on the back we put a Sudoku puzzle. So if you have a kid in house, then the kid will take your bank statement and he'll start playing with it. And he'll ask you, Mama, When is your next statement coming from the bank?
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/etnow.